Hi everyone, welcome to another video. Today I'm doing a different type of video. I wanted to kind of share how we organize our money through our bank accounts. I don't know, this is something that I would find interesting if other people shared it, because I watch all types of budgeters, people who budget with 100% cash and people who budget online, cashless, regardless, right? So I'm going to jump right in with starting off with our business accounts. So if you're new here, my husband and I live in the Bay Area. I've lived here my entire life. He's lived here for 20 plus years, and we're expecting our first baby in October. And so he is a general contractor, so that's where we'll start off. He has a business bank account for his business. And then for me, I'm also a contractor, an independent contractor. I do bookkeeping for small businesses as well as money coach for individuals and families. So I also have a business account for my business. Now, this is where all the money starts off, right? Any income flows into these accounts first. Now, moving on, I have a separate savings account for taxes. And so when I get paid, I calculate taxes, usually between 20 to 30%, and put that money into the tax account, which is a savings account. That we pay taxes every 3 months, on a quarterly basis. And so when it's time, then I'll write a check for taxes. Augie, on the other hand, has a little bit more. He has a savings account for the business, and then he has a credit card for the business. And he does the same thing, puts portions of his income into savings. The savings also includes a lot of, I guess you could call it like an emergency fund for his business, since he has a larger business than I do and he has employees under him. And then, business expenses come out of these accounts. And he has a business credit card to build up that business credit history. So that's kind of where we're starting off, right? We each pay ourselves out of the business account. So in our bookkeeping world, it could be considered owner's pay. And we both have that or do that. So that's that. And so now we're getting into our personal accounts. Now for personal accounts, we have one account, a checking account for our house. We own a home. We have a mortgage on it, but we rent out the majority of it. So we have rental income that comes through. And so we like to separate that income into this account. Then we also have expenses that come with the house, such as insurance, mortgage, obviously, taxes, and then maintenance as well. So we have a separate account for that, for the house. Then we have a personal checking account. And this is your regular checking account that we use for all our expenses, groceries or any automatic payments for, what else? Medical insurance, gym memberships, subscriptions, anything obviously personal, basically everyday living expenses. Except for mortgage and utilities, because that comes out of the house checking account. And then from there, we have a savings account for where this is where our emergency fund is kept, as well as this is where all our sinking funds that are not necessarily cash. So if you watched my previous videos, we have a baby fund and we're now working on a medical fund. And so most of that those funds get placed into this savings account. And so we bank with these particular accounts. We bank at Wells Fargo. It's not our favorite bank, but honestly, the convenience of it is what keeps us there for now. So that's that. And then other side notes here that we can place is that we do have another savings account at the same credit union that I bank with for my business. This savings account hasn't been touched in a while. So, but this is an account, it's a high yield savings account, meaning the percentage is higher than a regular, 0.02%. And this is where we have funds for our next big investment. And I just call it investment because we're not really sure we're not 100% sure what that is yet. We're thinking probably another home soon, not too soon, but we have money saved here, but it hasn't been touched in probably a year, meaning we haven't taken money out of it and we haven't contributed to it. It's kind of just sitting there for now because we do have other goals that I talk about in my videos that we're focusing on right now. Now, I think the last thing I'm going to go over is credit cards. We do use credit cards, maybe not as much as a lot of other people, but we still use it to make sure that our credit is still being built. And then also for the points, point wise, we're trying to accumulate points, so maybe that we can use that in the future. So in terms of credit cards, I would say that it's probably we're not as organized with our credit cards because a lot of them were opened many years ago when we were still trying to organize ourselves and figure out what worked and didn't. And so we opened it at a time when we were still in debt and we were just, you could almost say, not really thinking through which credit cards to apply for. So, but I will note them down in case you're interested. So we have a Capital One credit card. That is Augustine's. It's under Augustine's name. He's the primary account holder. This is our main credit card. This is where we do a lot of our purchases for points. This is where, I'll do it in another video, but basically we buy things online. We use the cash from our cash envelopes to pay back the credit card. That is our main credit card. The second one we have is a Wells Fargo credit card under my name. And this credit card is used primarily for a lot of the house expenses that we use. We purchase so that it's easily to pay because they're in the same bank. These accounts are with Wells Fargo. It's easier to pay that way sometimes. So these are the two most used credit cards, and because we have a very high limit on this one. We do have other credit cards that we occasionally use. We have a Gap, the clothing store. This was opened back when I was like 20 or 21. We use these for big purchases. So this is under my name. If we go on vacation, big, large purchases that we have the cash ready for, but we use it because they give us points, and we actually do some shopping at the Gap brands, Gap, Old Navy, Athleta, and then our favorite is Banana Republic. So this card might not be for everyone, obviously, but we do shop at the Gap brands, and they do come in handy when it does come for us to buy clothing. We do get a lot of discounts with this card. And then other cards that we have that are really not, they're still active, but we hardly ever use it, is we have a Best Buy account, Best Buy credit card. Sometimes we use for, you know, we have it open because we just have it, but it's helpful when we buy like an electronic for fun, and then we can pay it off over a period of 6 months without any interest. So those are our main credit cards for now. Ideally, we'd want to stick to less, but I think 4 is pretty good. We used to have more. We used to have a Macy's card. We used to have, I think, a Mancini's, because we bought our mattress and whole bed set card. But I think with credit cards for us, the less, the better for us. So we've come a long way. We've used to have a lot more. And another topic would be, you know, closing down credit cards and how that affects your credit score, etc. But yeah, that's kind of how we have our bank accounts organized and set up. I know a lot of people probably skip all of this, right? Because if you have a W-2 job, a 9-to-5 job, you know, where they take out all your taxes and all that stuff, you probably would skip this and kind of start from here, right? But if you are a business owner, then your setup might look somewhat like this, right? But that's it for now. Just wanted to share kind of how our money in bank accounts are organized at the moment. We've come a long way. We used to have a lot of Capital One. We actually still do. I should mention, we still have a Capital One checking account, but we don't use it anymore. I used to have a bunch of saving accounts with them so that I could put money for each sinking fund, but that just got to be too much for me. So one savings account with our emergency fund and sinking funds, you just got to make sure that you have it tracked elsewhere on a spreadsheet in your notebook to know what, you know, how much money for each account, which again, I can go over in another video. So have any questions or comments, leave them down below. Until the next video. Bye now.